Hello everyone, welcome to Elliott Wave Forecast.com YouTube channel. My name is Henry Lau and today is April the 2nd, 2019 and the time is 4 a.m. GMT. We are looking at oil's chart 60 minutes here, and we can see right here that oil is currently within the wave 5 in blue. Okay, so we are within the wave 5 in blue, and the wave 5 subdivides into another 5 waves as an ending diagonal. We have this wave 1, wave 2, wave 3, wave 4, but subdivision of the 1 and 3 is in 3 waves, so that means this is an ending diagonal. Okay, and based on this 1 hour chart, this suggests that as far as the pullback stays above 58.18, we should see another leg higher in oil. We've been bullish in oil for quite a while. We've told our members that we like the upside and we like to keep buying the dips in 3-7-11 swing. But now we think oil is close to reaching the minimum target here, and we can get some sort of profit taking and a larger risk pullback. We're gonna step back and look at the larger degree. Here is the for our chart. It's not a complete label here, but we can see right here that the rally after forming the low on December last year 26, we've been in a 4 months rally right now, and the rally looks to be unfolding as a zigzag right now. So we got this A as a 5 waves, we got the B as a flat, and we have a C leg. This is where we are right now as another 1, 2, 3, 4. So this 3 and 4 in blue can be seen right here in the 1 hour chart earlier. This is the 3 and 4, and we are ending the wave 5 of C right now. This rally to the upside can be counted either as A or 1, and this is B or 2. But if this is going to be a 3, usually the wave 3 has an extension. Typically it's the strongest, the longest wave, and it has 1.618 Fibonacci extension. But if you do measure the extension right now, we are nowhere close to the 1.618, which is going to be $70. And yet at the same time, we already can count a 4 waves here right now in the C leg. So this means that even though we can become a 1, 2, 3, 4, 5, but since we already have 4 waves here, it is less likely that we go to the $70 from where we are. If this is truly 1, 2, 3, 4, the 5 should be ending somewhere below this. So expected target is going to be between 63 and 66, more or less. So we could be ending the wave 5 somewhere around this blue box area, and that will end also in the wave C. So instead of 1, 2, 3, then this can be an ABC zigzag as a conservative sort of view, right? And then from here we can get profit taking and also a larger risk pullback. All right. Now, interestingly here, if you overlay this with the index, this is ES for example, right? You can see that they both top at the same, more or less around the same time, October 2018. They bottom also more or less around the same time, December 2018, and then they both start to rally from that low, and it's been a 4 months rally right now. But oil is going to reach our minimum target very soon, $63, 66, 63 to 66, and once this target is reached, again this cycle has a chance to finish, and we got a chance to do a larger risk pullback, at least, right? Some sort of profit taking or a larger pullback. Now when that happens, okay, when that happens, then if the correlation remains the same with the index, we can expect the indices to do the same and start to correct this cycle, at least a larger risk pullback. All right, so that means that I think these two instruments are correlated right now based on the risk on, and shorter cycle though, we can see oil still can find support for more upsides in the shorter cycle, but we are getting close to the target area where we can expect oil to start pulling back and doing a 3 waves, at least doing a 3 waves pullback. All right. So if you enjoyed this video, feel free to check our service. We have 14 days free trial, and the link is provided in the description of the video. And you can always subscribe to our channel and like it as well. Thank you very much, and I'll see you all again tomorrow.